Good morning, Corey Schrader with Black Creek Wealth Management. Hope you all are having a wonderful morning this Thursday morning, this palindrome week. So just on that, did you know that if you reverse all the numbers this week, they basically palindrome being like race car, where it's the same word back and forth. Wanted to put out a little bit of some information this morning. If you have not looked at the news, apparently Russia has invaded Ukraine. Spoiler alert, this is not something we didn't already know was potentially going to happen. So this is just letting us know that his intent was definitely to start taking a little bit more action in Ukraine and decided to go ahead and invade it last night. So, of course, the markets this morning are not happy. If anything, they are down, and they're down about 2 to 2.5% right now. So they seem to be holding as of the futures this morning. So what I'm looking at just getting out to you here today is a little bit of some information around, how are you protected? Number one, what is Corey doing? And ultimately, what do we see on the horizon? Is this something that's going to persist? Is this something I need to be worried about? What is it that's going on? So in the effort to over communicate, as I tend to do for better or for worse, the biggest thing to know is that it's going to be okay. And the phrase that I love to use in this is "this too shall pass." And I'm going to show you how and why that is actually the case, because emotionally, this is hard to deal with because we've seen a really good run in the markets. We've taken advantage of it. And to give any of that back, really, for lack of a better word, it sucks. Okay. I would love to keep everyone at the highest of the highs and not see any sort of downside. However, the market does not like that, and it will always test to make sure that should we be where we're at, and I'm going to show you how it's been doing that for the last 30 years, and you, whether you've known it or not, has actually been testing us each and every year. So I'm going to show you a couple things, but the biggest thing to take away is this too shall pass. And biggest thing is that we've already planned for this. I've been talking about this since I think mid-November when we had the client appreciation event, that this year was going to be rocky, that we were going to see some things start to shift against what we are used to. I even sent out a video earlier this year in January, to be honest, I think it was like the first week of January, that talked about running your race. And what I was talking about then was this, is regardless of what the market does, good, bad, or indifferent, we need to know, and you need to know, what do I need to make to be successful? And that's why we've done financial plans, and we've talked about risk and return, and why planning is so important is because when this happens, you need to know what to expect. And, the market is down. It's probably going to be down about 15% over the last 2 months. That does not mean that you specifically are down 15%. Each one of you is different. Each one of you has a customized approach. If you're living on the money right now, we've built up cash reserves. We've built up enough in reserves for you to be able to weather the storm and still be able to get some of the growth. If you're 20 years away, this is a non-event. In fact, this is a buying opportunity. This is a, hey, Corey, prices were high, but now they're wicked low. And it's time for us to start looking at what are the opportunities. And that's what I've been doing behind the scenes mechanically to ensure that each one of you is protected. I've already moved away from the highly interest rate sensitive type things. I've already moved away from the pro-growth areas of the market that were going to be impacted greatly with the interest rate rise. We've moved away from some of those things in the short term to take advantage of some opportunities that will come up. Growth will be back. But right now, we're not going to effectively focus on that because the market isn't going to focus on that. So you're not going to make money on pro-growth areas, at least for the next couple of weeks. It will turn. It will turn. We will go back to pro-growth because that's what we want and that's what the economy wants. So the biggest thing to take away is that the economy is doing extremely well. It's also the reason why I focus 90% or more in the United States, because this is the best house in a bad neighborhood. This incursion, this intrusion, this invasion is going to have a small effect on supply chains for the United States. Energy, will also play into that because Russia delivers about 6 million barrels a day of oil globally. So it will affect supply chains, and with that will also affect inflation. My 2 cents on inflation is that some of it is real, some of it is not real. If you've looked at any of my postings over the last couple of weeks, I posted something on Disney, MGM, Hollywood Studios. They were standing room only. Disney has raised their prices significantly. And it's not just because the cost of food has gone up. My belief is that some of it is, in fact, supply chain issues. Yes, there is a lack of supply with the demand that's out there. But there's also a eagerness of businesses to take advantage of the situation. And if they're going to raise prices and people are willing to pay it, there's going to be that inflation too. Okay. I posted this about a delivery service that I was doing because, as most of you know, I broke my leg and I need people to deliver me food. So I looked into this, and one specific company was charging a 30% premium for the same order to deliver it to my house. There's no reason for that, but they're going to take advantage of it if people aren't paying attention. So we have different things going on. It is not all inflation as a result of inflation itself. Yes, there's a lot of money. People have really made a lot of money, as most of us have. Now, of course, today and in the last couple of weeks is going to impact that just a little bit. But over the long term, we've made a lot of money. Even with this correction, the market has averaged 12, 13% a year over the last 3 years. So let me just show you that real quick, okay? And this is not to, by any means, bring down the severity of what's going on. I'm just telling you this too shall pass. So if we look at the S&P 500, okay, let's look at over the last 20 years, okay? So if we look at it over the last 20 years, all right, this is what's going on. 2001, we had the tech crash, right? A lot of garbage in the system. Pets.com saying it's a $20 billion company. That's garbage. People were just egregious, over their skis, wanting to make money. It was just greed. It is what it is. It cleaned out. The system cleaned it out, and we moved higher. Let's go up a couple years later. Housing market. Okay, I was an appraiser and also doing investments at the same time. Banks were being egregious with the greed, right? Hey, this house is worth 20% more as soon as you put plumbing in. Let's go ahead and refinance it, take out mortgage, and buy another house. Let's flip these bad boys. Let's keep making more and more money. Hey, you know what? You make $30,000 a year, but I'm going to sell you a $600,000 house. Bad business practices. The system cleaned itself out. In the worst housing market, okay, since the Great Depression in 1929, the market started dropping the end of November of 07, hit the bottom in March of 09, was back to being positive at the end of 09. Within 12 to 13 months, we cleaned out the garbage. We cleaned out the system. The market rallied higher. Go back to 2018. The Fed said, hey, it's time to start raising interest rates. Market started dropping. People didn't like it. Fed said, okay, I'm not going to do any more. Market rallied back, but that was the next negative year. Then you go to 2020. COVID, anyone? Yeah, let's go ahead and shut off the economy. Nobody can do anything. Market dropped 34% at the end of February. Where did it get to by the end of February? Let's look at that. Actually, let's look at where did it get to? Oh my gosh, look at this. It dropped at the end of February all the way down to the middle of April, or I should say middle of March. And then by August, right? Look at this. By August, we were back to where we were before the COVID pandemic started. And we were in the middle of the pandemic still. Market rallied back. That biggest thing to take away with a couple of things I highlighted. Tech bubble came out of the blue. Housing market came out of the blue. COVID came out of the blue. Russia, we knew it was going to happen. Interest rates, we know it's going to happen. these are things that I want you to take away to know that these are not non-events. They're just known uncertainties, okay? It's not to say that there's a blind eye being put here. It just means to say that this too shall pass. And let me show you one other slide that I used to use all the time, but I got away from because the markets continued to move higher. Because nobody really wants to talk about the market declining in a year when everything is going well. Hey, just keep doing what you're doing, right? Well, the truth is we need to visit this, and this is how the market keeps us basically on our toes or on our heels, right? Is it wants to make sure that you're paying attention. So this is what I was talking about. So these gray bars is how the market, the stock market, the S&P 500 actually returned for the year. And the red dots are the negative events or the negative down throughout the year. So if you go to a year like 2002, the market was down 34%, closed down 23%, but it got all the way down to 34 before it rallied back 11 points and came, basically down to a negative 23% on the year. So the biggest thing to take away from this is you'll notice that there's not a missing red dot. Every year sees a negative intra-year decline. Many times when there's not garbage in the system, the market still rallies back pretty strongly. Look at 97. The market was down 19% and rallied back 27%. The thing you can't, it's a funny thing about numbers in general is you can always focus on what you want to see, right? And this is the last 30 years. 1, 2, 3, 4, 5, 6, 7, 8. 8 negative years in 30 years. Let's even round it up to 10. That's a 1 out of 3 chance that the year will be a negative year. 2/3 of those were positive years. Okay. So 67% of the time, market was up and was up pretty good. We have to shake out if there's garbage in the system. COVID happened so quickly. We rallied back so quickly. The stay-at-home trade rallied so quickly that a lot of those positions are down 60, 70% from their all-time highs. And they're still up. Some of them are still up about 15, 20% just year over year. So it had to clean a lot of that garbage out of the system. Well, we're at the point, in my opinion, where the market has cleaned out its garbage. We're gotten to the point where we are now starting to test, okay, should we move higher from here? And my belief is that we are going to. And I showed this in a couple of other trading newsletters that I've been putting out, is my belief is we are going to touch where we are right now as the market opens. It's going to be up about 410 today. I believe we may see it touch 400. Okay. Now it may touch that. It may not. My belief is that given the interest rates, given all these types of things, that we will continue to float in this range probably for the next 3 weeks. And the reason why is because there's uncertainty still around what is the Fed going to do around interest rates. My belief is that with Russia now invading, they're going to probably only raise it about 0.25%. They have to still raise rates. If they don't, we will see another leg down because people are going to effectively say the Fed's bark is worse than its bite. They're not going to do anything. They said they were going to do it. We don't believe them. Let's sell. And that's what I believe will happen. So it's one of the things that I'm watching out for. Again, we are protected, and I am taking a defensive stance, and I have been, since November now, that we were going to see some of this rockiness. So the biggest thing is again, this too shall pass. We will move on. It will seem like a distant memory. I believe by the end of the year, we will still see a higher market. And it's just a matter of to what degree, and the Fed really does control that. I do not believe we are in a recession. We are not going into recession. Even Russia doing this is not going to be any sort of recession. So the economy is doing well. We're raising rates because the economy is doing well and people have a ton of money and they're spending. So like I said, I'm here for you. If you have questions, concerns, thoughts, let's talk. I have you protected. If you need to start taking out money or anything has changed, let me know right away so we can start looking at that and looking at the environment moving forward. But I really do appreciate the trust. I will continue to take that seriously, and I will continue to make sure that you are taken care of. If you have trips planned, go do them. Go have fun. This is my worry. This is not yours. I got you. Let me know if there's anything else out there. If you have any, I guess, any other thoughts or anything else you want me to cover, let me know. I'll put out a video right away. But again, I appreciate the trust. Have a blessed day. God bless, and I will talk to you all soon. Take care.